So I'm a scientist by training. I have about 50 publications, 80 patents. I have chapters, a number of books, but I'm an entrepreneur by heart. So I've created a number of companies, and all those companies I've taken to a listing or I've taken it to an exit. So the last one I sold to 3M for 40 million in 2007. I was on 1 million revenues when I sold to 3M. What I'm quite good at doing is spotting disruptive technology before it becomes mainstream. You're never really sure how long it's going to take before it becomes mainstream, but if you get in early, you've got the right team and the right technology, you can make quite a difference. And that's what I've done with OptiBiotix. Can I just check now, who's heard of the microbiome? How many people here heard of the microbiome? So it's very, very good. So you've got probably about half the audience. When I wandered around 2012, when I founded the company, nobody heard of the microbiome. And now, most people have heard of it. And all the microbiome is the microbes on your skin and in your gut. And what I decided to do back a number of years or so ago was use the power of the microbiome to prevent and manage and treat human disease. And I'll show you how in a minute, okay? So a bit of detail, first of all, on the microbiome. So look at this tower block here, okay? This is the number of microbial cells in grey, and that's the number of human cells in black. So most of our body, okay, is made up of microbial cells. So 90% of the cells in our body are microbial cells. And that's important because if you go to this sphere here, that little dot in the center is the number of human genes, and the big sphere around it is the number of microbial genes. Those microbial genes, they create enzymes, they create proteins, and they start to affect human metabolism, human physiology, and a whole range of diseases. And so the central premise behind everything we do is by changing these microbes in the body, we can change these genes, and in doing so, you can start to change how the body functions. When I first went around in 2012, there's probably about 40 publications per year. There's probably about 40 publications per day now, and it's a massive area, as you'll see in the next few minutes. Okay. So moving on, just this slide here is laid out to tell you a bit about the technology, a bit about the market, a bit about some of the news on OptiBiotix. I'll start on the top left. So back in 2016, the World Economic Forum described the microbiome as one of the world's top 10 emerging technologies. In 2016, December 2016, early 2017, they pulled together all the clinicians from around the world. They asked them the question, what's the best technology? What's going to impact most upon healthcare? And people decided it's the microbiome. It's the microbiome. Let's say it's healthcare's most promising and lucrative frontier. And this is part of the reason behind it. This is a publication from January of last year. What you've got here are what are called discordant twins. So they're twins that are genetically identical, okay? In that they look the same, they have the same genes, but one's fat and one's thin. What you find if you look at the microbiome is different in the thin twin to the fat twin. Even more important, if you transfer some of these microbes from a thin twin to the fat twin, they become thin. So you start to get a technique where you can start changing the microbes in the body, and in doing so, you can start to change a whole range of factors, whether it's obesity, whether it's diabetes. There's some good data now on autism, Parkinson's, some good data coming through on cancers. So a really exciting area. And this is some of the market information on the microbiome. So the growth forecast for 2019, next year, is 22%. It's one of the fastest growing areas in terms of markets anywhere in the world. Really fast growing. And it's seen by the business journals as $1 trillion market opportunity. So starting small, growing quickly. And this is some of the information on us. So we've been on a lot of the share magazines, been in New Scientist. We're often in the Times, on the front page of the Telegraph. Just a couple of weeks or so ago, April, we were in the Times, the Saturday Times. We created a sugar, which is in fact a fibre, and it's sweet. We call it sweet biotics. That's looking really, really exciting. We create that from microbes, in the same way you create alcohol from yeast. So a really exciting opportunity. And so you can see we're doing a lot of things in the microbiome space. And you'll see later how we structured the company to deliver on to some of the opportunities in the microbiome. This is just a very quick snapshot of the company, just to give you a flavour in terms of where we come from and where we're going. So I founded the company in 2012, I was the only person in the company. We listed it on the stock market in 2014. I was the only person in the company. We had non-executive directors, but I was the only executive director. I then built a team around me of 6 people. So 6 people in the team, okay? We have myself, a commercial director, a sales and marketing director, a business development director, a head of sales and marketing. And so we have myself, so a very, very small team. You don't need a big team these days to deliver on value. We raised 7.3 million, and we've moved the market cap from around about 5.5 million to, well, the share price today is about 75 pence, so about 65 million, and since we listed in 2014. So we've grown fairly quickly over the last few years, but the key is not to look back, but to look forward in terms of what we're going to do in the future. So our focus, as I said earlier, is developing products to modify the microbiome. Microbiome, again, as I said earlier, is the world's top medical innovation. And look this up, okay? It's all in the public domain, and healthcare's most promising and lucrative frontier. I've created the company across 4 divisions, and I'll talk a bit about that later. We have currently about 1.25. We raised 1.5 just a month or so ago. So we spent a bit of that, so about 2.2 million pounds. Oops, sorry about that. About 2.2 million pounds in the bank. So we have sufficient cash in the bank to do all we need to do as we go forward. And last year we made a profit after tax of 1.9 million. That's not an operating profit. That's a profit due to an increase in value of one of our divisions that we listed separately. I'll come to in the next slide. That's a company called Skin Biotherapeutics that are listed on the stock market separately. And we should be self-financing by the end of this year. And a couple of other points to bring out. The key thing I want to get across to investors, this year has been a year moving from the R&D phase to the commercial phase. But in that process, we had a number of quite big corporate deals. With 2 deals with Tata, a deal with DSM, the world's biggest ingredient supplier, and 3 other corporate deals I can't release the names of. And they help us to fund our development. So they fund the development, and we have all the IP, so it's quite a good way of working. We've got some good early revenues, and we've got some. Last year, we launched a number of products. So we launched products in Europe in May and in September in the US. And in 2017, we had 10 deals. And we've had 9 deals since March 2018. So 19 commercial deals since we started launching products last year. So we're moving forward very, very quickly in terms of these deals. And some of these deals are quite big deals. One with a company over 100 billion turnover, and quite a number with companies that are more than $10 billion turnover. And what we're trying to do at this stage is, as you said, move from a development to a commercial business. And as you do that, the risk-reward ratio changes. So that's starting to attract an awful lot of interest from companies who want to acquire us as a company, as a division, or some of our assets. We've had 3 or 4 contacts over the last couple of months looking to acquire some of our assets, but it's too early yet. We've got an awful lot of value to create. So lots of products coming forward, lots of opportunities. And this is how we structure the company, okay? So I'm going to go from right to left. So these are the divisions. Remember, we've got 6 people in the company, okay? And we've got these 4 divisions. I created it this way to spread risk. This is the first division, and we call it OptiBiotix division. That product is on the market currently. It won Product of the Year this year across all of Europe, and Product of the Year last year across the UK. And these are coming through as other products. This area here, OptiBiotix, that's a really exciting division. We can create sugars, and we can add those to probiotics to enhance their growth. We can use these microbiome modulators to change the microbiome in a very subtle way. And in doing so, you can change what are called the short-chain fatty acids. And then you can change butyrate, propionate concentrations. That impacts upon satiation, impacts upon some of the cancers, impacts upon stress and anxiety. And then you can then feed some of these products we created here back into these products, okay? So whilst they're separate divisions, there is an interrelationship between these divisions. This area here, SweetBiotics, with 2 deals on that in the last 6 weeks, one with a 10 billion turnover dairy company and one with a 100 billion turnover manufacturing company. That's really exciting. There's 3 product lines there. People aren't fully aware that we've got quite a few opportunities there. And you'll see more deals on that coming through the next few months. This is our probiotic division. So this is microbes that you can use to change the microbiome. This strain here reduces cholesterol and blood pressure. This strain here impacts upon stress and anxiety. And we've got a deal on that with a Taiwanese company. And finally, just to show you another division, I'll tell you the story about this. So I bought this, when I listed the company in the stock market in 2014, I spotted an opportunity to buy some IP. I bought for £250,000 at Manchester University. I put £450,000 into it, so £700,000 in total. A year later, with Turner Pope, I put it on the stock market for 11 million, and now it's not worth 15 million, it's worth about 17 million today. So 2 years on, it's gone from investment of £700,000 to 16, 17 million today. And we own 42% of that. So we've got a big appreciation in that asset. We've got lots of good technology coming through here. And our strategy as a company is to grow these divisions to a point where they have real value, put them on the stock market separately, or maybe get an acquisition by a company. So lots of opportunities there. I'm sure we'll get a few questions on that later on. I'll go through the company's strategy. So I said earlier, develop products to modify the microbiome. We're very much focused on what I described as value-adding activities. We don't have any offices. Okay, our office is where we sit, where we stand on the plane in an airport. We focus very much on anything. I think when you take investors' money, you've got to think about how you can create value. So we're very much focused on value creation. We've built a big portfolio of IP. So we grabbed a lot of IP in this particular space, and I think that will hold us in very good stead for the future. And what I create is what I call double IP, and it's overlapping IP. So I overlap the patents, and on top of that, the trademarks. So I used to run a team of 130 patent attorneys when I used to work for 3M. I used to be a director of 3M Healthcare. And you learn then, in that particular case, how to, that lots of corporates, as soon as you speak to them as a smaller company, look to get round your IP. So by building this overlapping IP, you reduce that risk. You can never fully get rid of it, but it does reduce it. And you can see some of the deals in the industry. So this is one strain. Remember, we've got a strain which we call LPLDL. That was sold recently on 9 million revenue for 73 million. And that's not a particularly exciting strain. Ours looks quite promising in terms of, well, it's got some good clinical data, as you see later, to reduce cholesterol and cardiovascular risk. So some big opportunities for deals here. And the key is we're trying to create multiple opportunities across all our platforms to give multiple revenues and to diversify risk. And as I said earlier, there's a potential for each division to become separate legal entities, an independent trade sale or listed on the stock market. And the idea there, when we put on the stock market, is to give back a dividend to OptiBiotix shareholders as a dividend in specie or as a cash dividend. And we think that's a great way of building value within the company. I just want to go through this. It's really, really important as a commercial strategy. It's quite an unusual commercial strategy. And hopefully we'll get some questions later on this. So I decided earlier on that when I was building a company, I didn't want to build an ingredient company and sell ingredients. I wanted to build a company that created revenues and brought in revenues from all parts of the value chain. I'll explain what I mean by that. So I'll give an example here, LPLDL. So that's our probiotic strain that we created, okay? We then have struck a deal with a manufacturing partner. That's a profit sharing agreement, okay? So we get 50% of the profit when they sell any of that LPLDL, okay? So typically, if I give examples, these aren't real numbers, but they're not far off. So it costs them about €200 to create a kilogram of product. So they ferment it, they break it down, they dry it out, and they freeze dry it. It costs about €200 per kilogram. They sell it for €1,000 per kilogram, and we get half that difference, 800, 400, okay? And so that's the ingredient. So we get that on all the sales. Even more importantly, when they sell it on to an application developer, so these are people who take the our strain, so this is like a probiotic, put it into a package, put it into a capsule like this, like your paracetamols, put it into a silver foil. We then get royalties once they sell that. And that's typically between 7 and 12%, okay? And even further down the value chain, when they sell that to a distribution partner or a retailer, we get between 2 and 7% of royalties from that. So we get royalties from all part of the value chain. I can't guarantee it on every single deal, but most of our deals to date, that's what we get revenues from, all parts of the value chain. Okay, it's what, as I say, called a coffee bean model. So we can sell coffee as a bean, we can sell it ground down, we can sell it in tiramisu, we can sell it in coffee in different types, we can sell it as a cappuccino or a latte to the American market, espresso to the other market. As we move on then to, it's where it becomes important is as you go to this particular deal pipeline, it should hopefully explain what we've been working on the last couple of years. So if I go through this, okay, this is the 2016, okay, we had a development deal. This is the first part of 2017. We had, so this is the key here, we have formulation and application partners, manufacturing partners, and development partners, distribution partners. This is where you start to bring in the money as part of that value chain. You can see, as you go into the second part of 2017, we've got more distribution partners, okay? As we go in 2018, we've got an awful lot of distribution partners. So going back to that again, once you start getting the sales coming in from there, they then start driving the sales from there and the revenues from there. So you can see how the sales build up very, very quickly. And that's so we've had 19 deals in the last, since 2017, a lot, and with 9 deals in the last 4 months. So really flying in terms of deals. Just want to show you some of our products now, very, very quickly. So our product here is Slim Biome, okay? It's an ingredient that helps you reduce weight by impacting upon satiation. Got a number of deals and some quite nice ones here. So Seal Ingredients from the US, they take Slim Biome and they incorporate it into cereals. They add protein to it. So rather than have the traditional cereal, you've got a protein cereal incorporating Slim Biome. So they supply the Nestle's and Kellogg's of this world. We also got Morley Foods, who can take Slim Biome and put it into muesli packs. So you'll see later, we've got an awful lot of products coming through in this particular area. As I sort of touched on earlier, we won the Best Functional Ingredient for Health and Wellbeing in Food Matters last year. That's a UK award. And we won the Weight Management Ingredient of the Year in VitaFoods in Geneva. That's all across all of Europe. And that's a really, really big award. And we won that in May. We've got a really good study from Oxford University that we've just been published. And it shows that this product, Slim Biome, don't just reduce hunger. What you find, if you give people a choice of food and you take Slim Biome, they will take less fatty food and less sweet food, right, using Slim Biome. So it moves people away in terms of their food choice against sweet and fatty food. And typically, when you take Slim Biome, put it into a product, we put it into bars and shakes, people lose between 2 to 3 pounds per week. But more importantly, they lose weight without being hungry. So quite a decent product. If you look it up on Amazon, you can buy products on the internet, and you'll read all the reviews. Very, very good reviews, all 5-star reviews. So what we're doing going forward, we're increasing the range of applications. We've got gummies. These are these things that you can give to your children. If a big problem, particularly in the US, with children who are quite heavy. And we're creating an online platform. And we're extending our geographic scope into the US and to Asia. And we'll hopefully sometime this year have a major listing with a major retailer. We've been discussing this with 4 or 5 retailers for a period of time, and we're down to 2 or 3 which think are probably suitable for our product. So it looks like a big opportunity with some of these retailers. A deal with them will typically be worth, in terms of revenue per year, about 5 to 6 million pounds per year. These are some of our products. These are the smoothies. These are gummies. So they're gums, a bit like wine gums, which you can take, and they contain Slim Biome. These are bars I showed you. We put it into yogurts. We've actually just put it into bread, and we've got a big retailer looking at, because they make their own bread, putting it into bread. And 2 slices gives you your dose per day. And we did a 100-person trial at Reading University, and they found the bread tasted better with Slim Biome in than without it. And we think there's an opportunity in gluten-free bread as well, which isn't so tasty. These are the muesli pots. So lots of opportunities there going forward with Slim Biome. This is our other product, LPLDL, our cholesterol product. You can have it as a capsule, as a tablet. You can have it as a triple layer tablet, a single layer tablet. And this is some of the data. You can look this up. It's all published. So we did a study, 49 subjects, with 51 dropped out, 12 weeks, all done separately from us by Reading University. It lowered cholesterol by 36.7%. LDL cholesterol, which is bad cholesterol, lowered by 13.9%, increased good cholesterol by 6.5%, 25%, and more importantly, lowered high blood pressure. Really decent product, that is, and it's selling really, really well. We're combining that with other, for next generation, some of our microbiome modulators I mentioned earlier, when we get enhanced reduction in cholesterol. We've got multiple formulations that I'll show you in a second. And just with that particular product, with 12 deals since 2017, 5 since March, and some big companies that we've been working with in that area. We've launched in the US a month or so ago. That's selling really, really well. We've got some dairy applications we're developing in Asia. And this is a key point, actually. We've got discussions with a company, a pharmaceutical company, who are looking to take our product and develop it as a drug. So I don't want to do that myself because it's too high risk, but they'll pay for the rights to do that. And that's because when I created the product, I used drug discovery programs that were validated for pharma. So I've created a food product, which we're focusing on, or supplement, I should say, which can also be applied to pharma. And we've got a whole range of application areas that we're developing. These are some of the concepts, and just quite quickly, you can look at, if we take our LPLDL, EPA and DHA, so for example, these are omega-3 and omega-6s, they're commoditized items, so a company like DSM just sells millions of EPA and DHA. By combining that as a commoditized item with LPLDL, you create something which is far more beneficial, has a greater effect, and has a higher value to customers and a higher price. So lots of opportunities there to extend the application areas. Just want to touch on this. This is the probiotic market. So probiotics are bacteria. They're good bacteria. You take into your gut and they create a health benefit. In our particular case, reduce cholesterol. And this is the market in the US, okay? A $3.3 billion market. The growth rate in supplements, which is the area we're in, is growing at 55% per year, okay? Big market, big growth, and also we've got a big amount of dairy as well. So you can see why we've gone to the US market, and you can see we also have gone to the Italian market, which is the biggest market in Europe. So the markets we're going into are very focused in terms of high growth markets with big opportunities. It's not random, the deals that we're striking. I'm just going to finish off now the next 3 or 4 minutes, but I just want to tell you a little bit about the future. So there's no guarantees of any of these, right? This is what we're working on, which may or may not materialise over the next 0 to 12 months. So I went to this big conference or big exhibition called VitaFoods, where we won the award for Slim Biome, and we were nominated for LPLDL. Lots of interest there. We thought we'd have 1 agreement per month. In fact, we've got 2 agreements per month since that show. Each of the agreements are greater size and more territories. We thought we'd have a license agreement with a large pharma, more than $1 billion turnover, but that happened last week, okay? So we got a big deal there, and that's to fit the Italian market, to take LPLDL into the Italian market. So when I wrote this 2 weeks or so ago, those hadn't been achieved, but those have been achieved in the last couple of weeks. We're trying to build our online consumer division. So this is putting our products online, not just for GoFigure, which is online currently, but Slim Biome, our probiotic, and eventually our sweet fibers. And they showcase our products and allows us to industry to see what we've got and taste what we've got. This is really exciting area, really exciting. This is where we create our sweet fibers. We have got a manufacturing agreement in place with a global partner. They're a $100 billion turnover partner. They are one of the top 50 in the world in terms of size. We've got another ongoing in terms of discussion. We've got an application agreement already in place for dairy with a $10 billion turnover company. And we've got another one which hopefully will come through in the near future. We've got a lot of other agreements that hope to close out in cereals, in some of the beverage products that you can see around. So a big opportunity there. I don't know, just go back. Just a couple of these points here. I touched on it earlier. We think we'll get a license agreement to take our probiotic as a drug into the US. We hope to get that over the summer. There's no guarantees of this, and they can drag on. It's quite a complex agreement, but it looks a big opportunity. And that'll be a 7-figure sum if we get that across the line, plus ongoing revenues. It'll take time to get the revenue stage, but we have some upfront and milestones if we get the deal right. We think we'll get either Go Figure and or Slim Buying in one of the supermarkets. We're going to launch Slim Buying in Asia. I mentioned earlier, we've got deals with Tata. We've also got other deals that are coming through in Asia. And I touched on earlier that we've got the SkinBiotix division. Our aim is to create a dividend and give that back to the shareholders. And we'll do that subject to market conditions when the time is right. And what we'll hopefully see this year and at the end of this year and the start of next year is rapid revenue growth. And just to finish off in the terms of the last slide, so why should you invest in OptiBiotix? Well, first of all, I'd say invest in the microbiome, a big opportunity. It's a large market that's growing very, very quickly. It's seen as one of the hottest areas of healthcare innovation. There's lots of interest in it in terms of scientific interest, lots of industry interest. We focused on developing products that impact upon chronic lifestyle diseases, obesity, diabetes, heart disease. That's a big, big market, and it's fueled by consumer interest in improving their health, and the fact that a lot of healthcare can't pay now for treating people. They have to put more money into prevention. We're the leading edge of this market. I spent January, February going around the US, meeting all the large corporates. It's clear we are leading the world in this particular area, because you're always slightly concerned that you think you are, but you meet the large corporates and they're doing things internally. Our products, our science is winning awards. We won awards at the two big conferences, and these are conferences that have 10, 20,000 people at. So our science is winning awards. Our products are winning awards. We've got lots of industry interest, strong deal flow. There can't be many companies who have 6 corporate deals and 19 deals in the last 18 months or so. So lots of industry interest. We're structured in a way to reduce risk, and I think if we carry on the way we're progressing, we'll add to that deal flow, and hopefully we'll see revenues coming through in the end of this year and growing exponentially, probably a hockey stick effect as you go into 2019. So a great opportunity in terms of the industry, and I think a great opportunity for OptiBiotix. So thank you very much.
Okay, I'm going to ask one question, and I'll take it to the audience. If you ask a question, I may well repeat it just for the benefit of the camera and for people who are even more hard of hearing than myself. My question is that there's a lot of numbers there about the size of the market, but when it comes to the announcements which OptiBiotix has put out, the running joke is that you use Adam Reynolds' keyboard. That's the one which doesn't have any numbers on it. You mentioned one deal there which might be worth 5 million quid to you. Is that in revenue or profit? And that's a deal which hasn't yet happened. You talk about 19 deals. What are they worth?
So it's a good question. So part of the challenge when you're in an industry where where the technology is coming through, is a lot of the deals that we strike, the corporates in particular don't want to give out the deal information, because if you do, first of all, it discloses what they're doing, and often you'll see with the big corporates we don't give any names, or they don't allow us to give any names, and also you don't want to give the deal details, because what then happens is sets the benchmark for further deals. So it's quite a difficult negotiation, and we've had situations where a good example was Tata, which announced eventually. It took us 6 months to actually get their name out there. On one stage, they said to us, if our name is mentioned, the deal's off. Okay, so they're very, very. And I used to run I used to be a senior director of DSM, and you'd look at it and you say, well, why you're using my name, DSM? 3M. You're using 3M's name to leverage your position, to increase your value. I'm taking all the risk as 3M. So why should Tata take a risk? Why should DSM take a risk where we could damage their brand, and they get nothing from it, and we're getting everything from it? So that's part of the problem we have going forward. But what I've said to investors is typically the smaller deals, the smaller companies are worth £250,000 per year, okay, maybe a quarter to a half, and the larger deals are worth about £1 million per year. Now you can work out very quickly with 19 deals, even taking £250,000 per year.
So £250,000 just coming to your top line or to your bottom line?
So it depends. So the when you have the royalty-based deals, right, they come into your bottom line because there's no cost to us. If you go back to that particular, it's a very good question actually. If you go to this particular commercial strategy, the manufacturing partner, we do nothing. They manufacture it, they take the cost got a manufacturer, we split the profit. That's the formulating application developers, that's a royalty payment. Between 7 and 12%. Again, here, another royalty payment. That comes straight to our bottom line. If you work with a retailer, okay, that's far more complex. So what you sell, typically, they'll take it between a 40 and 60% margin, okay, and then expect you to put in another 10% in terms of promotion activity to drive football to the... So that's why it's quite complex in terms of the deals with the supermarkets. So there's many parts. We're trying to create a company with many channels to market, or the retailers, or this sort of approach. Our focus is B2B. That's our focus. The retailers just create awareness and drive some revenues, but you get less profit from them.
Is there any chance that your grotesquely overpaid and useless broker is going to put a note out with a forecast? For those of us not, blessed of a second sense, so we'd have to guess the profits.
So you don't have to guess the profits, but I've just given you an indication in terms of a...
Well, some of us aren't as clever as you, Steve. Is there any chance of the broker actually putting a note out?
Take a bottom line, take £250,000, take 19 deals, round it up if you want in terms of 20 deals. You've got around about 5 million. So that gives you an idea in terms of what the likely revenues are. The issue in terms of forecasts is that you have to be very careful with forecasts. I'll give you an example. Those deals we talked about in terms of retailers, you can't do a sensitive analysis on them. It'll either happen or not happen. It'll be 5 million or nothing. Okay, it's not 5 million or 3 million. That's the way it goes. We've just struck these 19 deals. We're building up a relationship with these distributors and partners. Typically, and I've done this many times, out of 10 deals, you get 3 or 4 that will be really, really good. You get 3 or 4 that will be average, and the rest will be crap, right? And you've got to dump them. So out of those 19 deals, some of those we will dump, and we get more people in. Others will do really, really well. And you don't know which ones are going to do really, really well and who are going to be rubbish because the deals have only been struck the last year. But the maths would say that with all that many deals and more to come, we've got a good opportunity for revenues. So in
terms of that broken note, that was a no then?
I guess you spot I didn't answer that question.
Okay, you have a gentleman there in pink shirt.
You must have a business. Presumably it would take 3 years out. You must have an indication of what your turnover is.
Another guy who can't do the maths like me, and we haven't got a broken note. So could you help us and give us a range of estimates of what revenue could be in 3 years' time?
Yeah,
ballpark, roughly.
Yeah, so I've given you some indications in terms of the deals. So we do have a business plan, but when you're creating a new company, and a business plan is only valid on the day you write it, and it changes the day afterwards. And we're in an industry, we're in an area which is very, very new. And the reason I created this, what some would say is a complex structure, those 4 divisions, is that when I set the company up, I didn't believe that all my technology would actually develop into products and come to market, but everything worked. Now, in science, normally, things don't work out. But all the technology developed into, so all these products here have gone through the internal science, it's gone through the human studies, and they've all worked. So that's created plenty of opportunities for us. So in our business plan, I assumed 2 would come through as opposed to 3, then I acquired Skin. So we've got a pretty good idea internally in terms of what our forecasts are, but we're uncomfortable in terms of disclosing it, because once you disclose it, that becomes, as far as the regulator is concerned, it becomes a market forecast, and you get judged by that, and there's too much. We haven't got a trading history currently. Once you build up the trading history, I'll be more comfortable making a forecast. At this moment in time, like the weather forecast, you've got nothing to judge you on, you're guessing. I don't guess. So I'm building the business, structuring it as we can to diversify risk, and as I'm giving you indications in terms of the deal structure and what they're worth. $250,000 to $500,000 for the smaller deals, more than $1 million for the larger deals. You can have a pretty good idea going forward. If I do a 3-year forecast, I will be held to it.
Is it conceivable that fixed costs in a 3-year view will remain at around about £1 million. But assuming that there have been no more spin-offs, is it conceivable that gross profits would be in excess of £10 million?
Yeah.
Okay.
Yeah.
I'll let you off with that, but I still think you're wriggling. Gentlemen the three gentlemen in the blue shirt, so we'll take the one in the middle.
First question is really about the results. You've got 6 staff. You've got negligible turnover. 6 months to get results. So I think it's a very big red flag.
Why do you think it's a red flag?
There's a point, and actually, I meant to be nice to you, but I agree with the gentleman. You are a small company, 6 staff, very small turnover, and you got your results out almost on, within weeks of days of the last day, 6 months. You should have been able to get your results out quicker, Steve.
Yeah, so you could see what we're doing in terms of the deals. We're trying to focus on deals, and that's been the focus for the last sort of part of the results period. We also added some complexity into it. Now, during that results period, we did the listing on AIM for skin biotherapeutics. That created a challenge in terms of some of the accounts coming through. But I think the essence, what you're saying is right, it needs to be earlier. But the reasons for it was what I just described. But I didn't see it as a red flag. We're just...
So we can expect half years very complex.
Well, it depends what we got coming through the next few months.
Going forward, would it be an ambition of the company to get its results out in a more timely fashion?
We'll get... So we've got 6 people, right? And that creates a challenge. We can add more people to it, but you can see I'm quite tight in terms of infrastructure. I want to put money into areas where I can create value. So we'll probably get our results out in August for our half-year results. But typically in terms of the full year, which is probably more important, typically we're sort of 2 to 3 months rather than 6 months. It was a little bit difficult last year for a range of reasons.
I think what private investors are struggling with, you're signing fantastic deals with companies that turn over 100 billion.
Yeah.
Now, Tom's invested in a company called Phalanx. If they announced an agreement that a 100 billion turnover company, their market cap would turn over 100 back in a week.
Oh, bring it on, bring it on.
For some reason, private investors aren't buying into these, currently buying into these deals.
Could I rephrase the question a little bit?
Yeah, of course you can.
But it'll be equally cruel. You announced 19 deals using the Adam Reynolds keyboard, and the shares seem to be reacting less and less. Would you concede that there's a sense of ennui, that investors are just saying, oh yeah, another deal with an unnamed company, it's worth $100 squillion, but he hasn't mentioned a number, that actually you need to announce something a bit more tangible before people get excited?
So I think I explained earlier, if I start to push corporates in particular into the numbers, I won't have a deal, right? So is it Deal No Deal? I can't remember that program. So that's my choice. So we get them across the line. I've indicated to you, as I said earlier, about £250,000 to £500,000 and so on. And the key here, where you have to, it's about linking it through to revenues. I tried to use this slide to illustrate, well, these 2 slides really, that you have to link all these things together. You have to have the manufacturing partners in place to produce the product. The formulators can put it into the sort of the capsule, the tablets, and then go to the distributors. And what you've got as you go through that process is this chain. So once you get to that point where you've got a large number of distributors, you'll start seeing the revenues coming through fairly quickly. And then I think as an investor, you've got a couple of choices. You can invest when you see those revenues, okay, in next year, and then the share price will be wherever it's going to be, but it'll be higher than it is now. Or you can invest on the promise of those coming through. You can see those deals coming through. They're all validated by the regulator. They get the contract. They're not made up deals. They're all he gets the RNS and he gets the agreement, and we'll see what comes from them.
I'm going to take 2 more questions. And I'm going to say that if you want to give Steve some more grief, you'll have to do it at the end of the campaign.
Oh, yeah, anything. And ask any questions.
We'll have 2 more for this session. Gentleman here.
My question is, as a scientist, you have 6 people. Where the hell is your research laboratory? Where the hell is the PhDs, etc., doing the research into the products?
So we have 6 employees.
I understand that your product is not, it's a healthcare product or whatever. It's not a pharma product. So obviously you don't have to meet the appropriate regulations. But all the same, research is necessary.
Okay. The question is, you've only got 6 employees. Yeah. Where's your laboratory?
Yeah. So you've got a couple of ways of building a company. I've done this many times. You can build up infrastructure yourself. That's in terms of science, and have your own laboratories. And that's an asset which is depreciating. And build a scientific team. And I've done that many times. With 3M, I had 1,800 people, and I was with 3M. The problem, and this is moving so quickly, you need to change your skill set and bring new people in. So our model I've created is a model whereby we contract in researchers. So we have labs that we contract in people from Southern Europe, from Madrid, from Barcelona, or hot places. We have people in Reading. You saw the publications where it came out to Reading. We have a University of Surrey. We have the University of Brighton. So we have labs. We have other places in the US. So we contract in those postdocs. We pay for a large number of postdocs and PhDs. Okay? And they do the research, and I write the contracts very carefully. So if I ask a scientist normally to create A, B, and C, you've got to be very careful. They come back in 12 months' time, so you've got some really great data, but it's on X, Y, and Z, because that's more interesting. So I write a contract whereby we track them every single month. We have calls every 2 weeks, okay? And we have meetings every month. So we want A, B, and C, and they follow that path. We own all the IP. If they don't deliver what they've said, recognising that sometimes you can't predict science, then we close that contract down. And the reason we go to Spain and Barcelona is not because of the heat, but because a postdoc in the UK will cost 120 grand per year. In Spain, it will cost 30 grand. Okay, so you go to Southern Europe. So again?
You have to pay for the labs as well.
No, you don't pay for the labs. You're paying for the postdoc. There's a cost overhead. You don't pay for the labs. You don't pay for the equipment. That all comes part of the deal. So the overhead in the UK is 120. The cost is 120. So the agreement with the university also includes the overhead for the university. Okay, so it's depending on which university, between 120 and 150. In Madrid, is 30. Okay, same. Okay.
Okay. Final question was that guy there.
You've had a number of businesses. You started this in 2012. If I give you £100,000 this evening, what's the best or worst case scenario?
He wants to give you £100,000.
I got that bit. Yeah.
What's the best you can do with it, and what's the worst you can do with it? Worst, put it on England for the World Cup, lose a lot.
Oh, I don't know. I'll start with the risk first of all. The biggest risk at this moment in time for the company is the people. Right, we've got 6 people. They're core to the company, and we're in an area which is really exciting. You run the risk of them being poached, a bit like a football team. You have a good player, a bit like Southampton, if you like. They get the best players poached, so that's our risk. That's why we use options. We can't pay them. So some of these corporates come in and they'll offer you £250,000 for some of my team. Okay, and we can't pay £250,000 for our team, so that's where we use options to try and entice people. So if they can deliver on their performance, then they can then exercise their options. So that's the biggest risk: losing our team, or having some of the teams not performing. And you'll see with my board and with my team, I will change them as you build the company. So we changed, for example, David Evans, the chairman, Adams, not because they weren't performing, because you need a different person for this stage of the company. Right? When you need people with sector expertise. That's who brought in Neil Davison, and I'll continue to do that, right? And I'm quite hard on that. If we need a different person for this stage of the company, then I'll move people on, and that's the way you have to do it. In terms of the opportunity, if I go back to the diagram here, and I honestly believe this. So this area here, I think, could be worth in its own right 50 to 60 million. I think this area here could quite easily be worth 200 million in terms of valuation. And this is not me making up numbers. This is in discussions with other groups. This one here between 50 and 60, and that one there probably to 100 million. So that's sort of the upside.
310 million. So that your 100,000 in a best case scenario would be worth what's that? 600,000. Oh, that's okay. Okay.
You said you couldn't do maths. You said you could do maths.
Is it worth?
So yeah.
Am I going wrong?
And then the worst case scenario, I guess, in terms of an investment, you're in a volatile world. You've got, Trump and North Korea, you've got Brexit, and things beyond our control. But all the science there is solid. Okay, you've got, as I said earlier, the science winning awards, product winning awards. It's now about commercialising and turning those deals into revenues and making sure we grow the business in the right way.
As it was on camera, I think I meant 500,000 just to show that I can do my maths. But, okay.
Yeah. Can you edit out?
Final question, because he's a bit shy. The gentleman at the back in blue, Mr. Ray. How much skin have you got in the game? What's the value of your shareholding? Don't tell me options, because I don't care about them. That's one-way bet. What's the value of your shareholding?
Of mine?
Yeah.
I have about 13% in the company and about 6 million options.
Options we don't count about. That's a one-way bet. But you got 13% of the equity, so it's not an insignificant amount. And you sold any shares?
My family and friends have substantial amounts as well.
Have you sold shares or bought?
Never sold shares?
And you bought in the placing. What was the last time you bought?
I can't remember. I buy when the opportunity arises.
I think you bought in a placing at 70 odd p.
Yeah, 70. I think my family and friends bought in at 75 as well. Yeah.
Okay. Good. All right. Thank you very much for that. Thank you, Steve O'Hara.
Yeah, thanks very much.